What's going on, guys? Let's talk about Tesla's price action. Today we were down 8.5%, $27 on the day. Now, this breakdown that Tesla's having is not new. Okay, so why we're getting the continuous washouts? For one, the entire market is kind of washing out. Okay, there's a little bit of a reset going on here. Two, this breakout started way back here, and the breakout started, or breakdown started all the way back here on January the 22nd. And why is that? Well, this is the first close below the 50-day moving average. Okay, so just to kind of understand, when you are a swing trader, you're an investor, and even if you're a day trader, short term wise, you need to kind of understand your macros, because when you're below, that's a little bit too big. When you're below the 50-day moving average here, and once we got confirmed, typically you like to gravitate, or excuse me, wrong one. When you're below the 50-day moving average and you confirm, you typically like to gravitate towards the next area of support. And in this case, it was a linear regression, and that price was sitting right here at around 387, I believe. Right here at around 373. So once we lost this 50-day moving average going back to January the 27th, 28th, and then we kind of had a little bit of a dead cat bounce, there's got to be a few things that are ringing the bell. For one, we have highs here, we have a lower high, we have a lower high. So we are staircasing our way down, okay? So once you start to see that, you want to shift your focus to the short side. You don't want to be the person who, oh, hey, we're down below the 50-day moving average. I think Tesla's going to bounce here. And then you go long on a green day and then you get smacked, right? So pressure is still down. Now, this was a key area here, this double bottom that we had. We kind of tested this rising support here. I believe this is 150-day moving average. We tested this support. We had a little bit of a 2, 3, 4-day run up, and then we kind of double bottomed, and there was no follow through to the upside, right? So once we started to fall below, and I'll look exactly which moving average this was. This is the 100 simple moving average. We've been on a 3, 4-day sell-off here, and a pretty nasty one at that, with today's candle being a range of 31 points. So with this being said, we have now traded well below our linear regression channel, and we tested our support of the 150 simple and 200 EMA, okay, exponential moving average. That's exactly where we're sitting. The game plan going forward is simple. Any dead cat bounce that gets rejected and this low gives out, we are targeting 277. There's no other if, ands, or buts about it. So you can set a price target at 280, or 285 even, or 277, but we are targeting this 200-day moving average. Now, do we get here on this cycle? It would probably be better, right? It would probably be better to have a 1-2-day dead cat bounce and then confirmation down here. Maybe we kind of sweep that 200-day moving average, and then once we reclaim it, and this is where you're going to want to start your longs. Now, if you, again, or dollar cost average. So this is a DCA area for a longer term play, or this is a bounce spot. If we do something like that, that's a bounce spot for a swing trade. Okay, that's what you want to look for. That's the ideal. That's the ideal situation there. Whether that happens or not, I don't know. We could definitely bounce from here, and if we do, what I would be looking for would be something like this. Like, let's say you gap up tomorrow and then you kind of wash out, and then it briefly stops and then starts to reclaim that area this week. Then maybe, we're not going to test a 200-day moving average. But again, at this point in time, I don't see why we wouldn't test a 200-day moving average. Now, to the upside, we can definitely get a 2-day dead cat bounce. That's more than possible, right? So if we do gap down tomorrow, and tomorrow being the 26th, if we open up lower, or off the open, we flush this low, and then we seemingly kind of take out the first hour highs, and it's a reversal after 10 a.m., then I would look for a short intraday play to the long side, and I would be targeting a price of 318. That's our next resistance zone. Remember, when you're underneath supply, like the 50-day moving average supply, the 20-day moving average supply, when you're underneath supply, your long-sided trades on a day in and day out basis, they're very short-lived. So we're going to respect every single level. And the levels that I'm going to respect is 318, 337, 345. That's our resistance levels. 318, 337, 345. That's our resistance to the upside. And again, if we get there, you could look for that dead cat bounce to kind of get faded off, look for a double test here, you know, and then look for that kind of move back down. And again, remember what I said about today's low. Today's low is going to be pretty significant, because if we do lose today's low at any point in time, just mark it out in your charts. 277 is going to be the price target. I hope this video helps you guys. If you want to trade with me each and every single day live, make sure to join the Discord. Link down in the description box below. Make sure to hit the thumbs up on your way out of here, and I'll see all of you guys on the next video.